Hey Lawrence, what's good? Today I'm going to show you two best swing trading strategies or methods you can use in Forex. I will start off by showing you a live trade and then we'll go into detail why this trade works, which methods you should use to enter and exit trades, what indicators to use, price action and much more. So if you do enjoy this video, smash that like button, and without further ado, let's just jump right into the video. So this is the USD Japanese yen trade on our MetaTrader 4 web trader. As you can see, we profited $350 in profit. Today's Friday, not much volatility, but I used the second strategy in this video to perform this trade, and as you can see, is performing really well. So I'm gonna just close this trade off now. And what we're going to focus on is two best swing trading strategies or methods you can use in Forex. So without further ado, let's just jump right into the charts. Right, so starting off on the 4-hourly time frame, this is the main time frame you want to enter your trades on when swing trading. Basically, what do we see? So we see a nice uptrend over here, right? It's shooting towards the upside. Push exhaustion scenario, we can see, a nice formation, a flag pattern, which usually means that it's a nice continuational push towards the upside, right? What else can we see? Well, we can mark, our area of trend line. We can see that it is definitely trending towards the upside. So more than likely this will continue. What should we mark is an area of resistance. So since this area zone was our previous high, we should definitely mark it just where the candlesticks start, not the wicks, because really we want to focus on candlestick closures where they actually close rather than the wicks. There are certain times where you want to put resistance near your wicks, but in this case, let's not confuse anything and focus on what matters. So currently a nice squeeze pattern, right? Shooting towards the upside, had a resistance over here. Sellers came in, start pressuring the buyers and push the market down. That's where we are seeing a nice push towards the downside, right? It started respecting the trend line. It previously respected this trend line multiple times. We have the 1, 2, 3 touch pattern. This is the first, second, third touch. After this formation, what else can we mark? Well, we can actually mark this little trend line over here, this little squeeze pattern, and this is where the wick identifying comes in, right? We could mark it over here and it would, suggest a nice break. However, I usually mark my trend lines as far as possible just so I know where the actual break happens, because usually new traders don't understand when the market is actually broken. What usually happens is traders think, oh, it's broken towards the upside, let's say, or this trend line over here, but then the market decides to suddenly drop down. Well, if you've drawn your trend lines correctly, more than likely that would have not happened. So once you have drawn everything on the 4-hourly time frame, it's really good to mention that I analyze everything from the monthly, weekly, daily basis and then only enter on the 4-hourly time frame. So the analysis on the monthly time frame in general should be just marking areas of sensitivity. So let's say this huge downtrend that we had for 13 years, it now has broken. As you can see, it has broken. The candlesticks are above the downtrend, which suggests bullish pressure. Another thing that suggests bullish pressure, if we just zoom in, this candlestick over here is a bullish engulfing candlestick, suggests a huge push towards the upside, probably retesting this area zone. So on the monthly time frame, once you mark this area of sensitivity, if you're analyzing properly, you could mark an area of support over here and everything, but I usually just mark areas where it makes sense to do so, right? The current action is in around this area, so I don't really care what's happening over here. That's why I don't mark it personally. It's your personal choice. Maybe you want to do it and some people do, but I don't do this. So we have this downtrend, weekly time frame, same thing, just more candlesticks. We can see a nice consolidation phase over here. After this consolidation, it broke towards the upside just over here. The daily time frame suggests the same thing. Consolidation did happen over here and it broke out with a nice bullish engulfing candlestick, right? On the daily time frame, bullish engulfing candlestick breaking into a new area level, broke this area of resistance, definitely means a lot, and it was a substantial trade over here towards the upside. Even if you entered over here, let's say we placed a long position, would have been around 100 pips profit at least. So coming back to the 4-hourly time frame, we know that on every time frame that we saw, monthly, weekly, daily, and the 4-hourly is currently trending towards the upside. It has finally changed direction after 13 years. So more than likely Euro USD, at the moment at least, will push towards the upside. So let's see what's going on, right? We are playing, and as you can see, it pushed through nicely. This trend over here we can remove. We already know it has pushed through, so the little downtrend that we had over here is no longer valid. So what can we do? Bullish engulfing candle, probably gonna retest this area of resistance. It did, pushed back down to the previous area of sensitivity, which was over here, previous area of sensitivity, plus the uptrend that we have on the 4-hourly basis. More than likely will continue to push up with a bullish engulfing candle retesting once again. So when it retests a lot, it retested over here multiple times, right? And it's a huge resistance zone. However, the momentum pushing towards the upside coming from the higher time frames is very strong. So more than likely it's going to be like a champagne bottle, right? You shake it and it's gonna shoot towards the upside. So let's see what will happen. Let's play the tool, and as you can see, a nice push towards the upside. This is not where we would want to enter the trade though. Why would we not want to enter here? Well, if we enter in that zone, we enter quite a late entry. Although it would have been probably profitable, still we can get a little bit more pips. So where is the ideal entry? Just around this area zone after a bullish engulfing candle confirmation. So what is a bullish engulfing candle? It's a blue candle swallowing the white one, or in probably your case a green one swallowing the red one. So over here, bullish engulfing candle, a closure, it has to close. If you see the candlestick still on a timer, if the candlestick is still active, moving up and down, do not place a trade until you see a candlestick closure as a bullish engulfing candlestick. You have no idea how many times it happens that the last 5 minutes the market decides to push down and not give us a entry confirmation, which then the trade is instantly invalid. But some people take those trades and then the market shoots down and you don't know what happened. So we got a nice confirmation over here. Stop loss should be around, I would say, just around this area. 80 pips is good, maybe even 60, but I would go for 80. Just a nice big stop loss, and then we can go for 160. Take profit level. Obviously you take your profit much quicker. So if you, let's say price range, we are moving towards the upside, 39 pips, you move your stop loss to maybe half of this, so maybe 40 pips or even to entry, and then you push with the market towards the upside and potentially make, let's say over here, 75 pips. Maybe you closed another portion of your trade out for 60 pips and you would have already made 60 pips, and although it pushes towards the downside, you already break even. So let's say on 30 pips you closed maybe 50% of your trade, 60 pips maybe you closed another 10 or 20%. However you manage your money, you would have already closed a portion of your trade and you would have been profitable anyway when it pulls back. Then you could have potentially tried to re-enter. However, we did not get a bullish engulfing candle. As you can see, this candlestick is still smaller than the white one. The white one's bigger. This one doesn't swallow the white one. Is not a bullish engulfing candle. There's no confirmation towards the upside. However, this re-entry over here could have been still valid if we moved our trend line a little bit differently, right? So let's just move this trend line, as you can see, just from here till this area zone, and this trend line makes sense. Once again, we have 1, 2, 3 touches, right? So that's the first, second, third touch, confirms a nice uptrend, bullish engulfing candle, enter the trade, pulls back towards the previous area of sensitivity, which is the trend line, and the horizontal area of resistance or previous resistance now became support. we are shooting towards the upside even more. And as you can see, pulls back, started trending towards the downside, bullish engulfing candlestick once again, push exhaustion, push scenario, shooting towards the upside again. And you could have been a very profitable trader if you use this method. Now let's have a look at some other methods you could potentially use to improve this trading strategy and understand what to look out for, when to enter and when to exit the trades. So once again, let's just come back where we started, in around this area. Let's say we use one of the indicators, the relative strength index, which is the RSI, a well-known indicator, probably the most used indicator out there. Super simple to use, however very powerful when used correctly. So after this push towards the upside, we had a overbought position over in this area zone. It started around here, still pushed towards the upside. So we know more than likely, since it's overbought, we are waiting for a bearish engulfing candlestick. We found a bearish engulfing candlestick over here, shooting towards the downside. So we know RSI has been overbought. A nice bearish engulfing candlestick does suggest that probably the market will turn around a little bit, right? So the market started to turn around, started to trend towards the downside, and the RSI started being in the middle. When it's in the middle, I recommend trading. You can definitely trade it since it's in the middle. It's not overbought, it's not oversold. Probably it's a good trade, you know, continuational push towards the upside, because we know the markets move like the Elliott waves, push exhaustion scenario, and another push towards the upside, right? So this is pretty much the same thing on the 4-hourly time frame. What we are seeing, also we are seeing the nice, you know, flag pattern that I mentioned to you guys. So once you see the RSI has been overbought in around this area, right, the resistance zone, you know more than likely it's a nice pullback before continuational push towards the upside, right? So you mark this area of trend line that we marked previously, right? As you can see, it keeps respecting it multiple times before it breaks over here and then pushes towards the upside with a bullish engulfing candlestick, right? Another good indicator would be the moving averages. I love using the two moving averages. The length of them is 25 and 50. If you use 25 and 50, as you can see, is trending towards the upside. The candlesticks never really broke the moving averages, so it acted as a nice support level. As you can see, it was a nice downtrend over here. Push happened, right? Breakthrough, bullish engulfing candle, exhaustion to the previous area of sensitivity, this previous area of trend line that we have, this previous moving averages, bullish engulfing candle suggests again a nice push, exhaustion, where to the moving averages, bullish engulfing candle once again. We are seeing huge strong pressure, so it's like a shaken up Coke bottle. It doesn't know what to do, and you open the cap and it blows very nicely. This is the idea of the trade, and it shoots nicely towards the upside after the exhaustion. As you can see, at that time when the bullish engulfing candle happened, it was in around an area of the middle, right? It hasn't been over here, so it's a nice safe trade towards the upside. And this is how you use indicators with price action. Now, if you would like to join our premium services, you can do so with the first link down in the description. We have recent reviews. We've been tracking our recent results as well. For 2 months, we literally lost maybe 6 trades out of 40 or something like that. We have our VIP group over here. Saying happy Easter to everyone. We didn't lose a trade this week, neither I believe last week as well. We've been dominating the Forex markets, and the main indicator is probably when people buy our monthly subscription and after a month they subscribe to a lifetime subscription, because they know we are smashing the Forex market. So if you want to join, it's the first link down in the description below. Hopefully you guys found value in this video. If you did, smash that like button. I do appreciate it very much. And this was Evildoes from Forex Trading Alliance. Hopefully you guys have a wonderful day. Happy Easter and goodbye.